Okay, Assalamualaikum. And now we move to chapter 3, approaches to ethical decision making. Alright, so these are the learning outcomes that we have to know. Number one is explain and apply the ethical decision making framework, and then apply the stakeholder impact analysis, and then you are able to explain the fundamental interests of the stakeholders. And then we have the three approaches. Number one is a 3-question approach, 5-question approach, and past tense approach. And then we are going to recommend the ethical action and then demonstrate the measurement of quantifiable and non-quantifiable impacts. Right, so learning outcome number one, ethical decision making framework. So this one is the ethical decision making framework. So this is what we call the transitional requirement for the profitability and legality as required by the stakeholders. So it means that here this is the framework they really want for the framework for the company itself to make profit and should be legal. And then the decision of or action should be considered ethical or right in a certain standard. So they must follow a certain standard, make sure this is right. So the ethical decision making framework assess the ethicality of proposed decision by examining the following. Number one, the consequences or the effect created in the terms of profit or benefit, and then the right and duties affected, including the fairness for those protected by law, and then the motivation or the virtue expected. So these are the three things we have to examine, whether the effect, the duties, and also the virtues ethic. Alright, so the first two consideration is relates with the consequentialism, as we know. So this is the consequences, so what will happen, and then the deontology, the right, and also the justice and the fairness. Focus on the impact of decision making on the shareholders and affected stakeholders. So this is what we call stakeholders impact analysis. So what will be the impact to the stakeholders? And then the third one is we have to consider the decision maker of the motivation of the decision maker. So we have to apply whether they are follow their virtual ethics. All right, so hopefully by doing this, all right, so it will we can assess the future problems or the current problems in a company. And then it is to note that the three ethical decision making consideration must be examined thoroughly, and that appropriate virtual ethic must be applied in the decision and implementation to make sure that the decision or action is ethical. Alright, so this is the things that we have to look into consideration. So this is the consideration that we have to take into in the case, right? And then so this is that relate with the philosophical theories. The first one is we have to see the wellness or the well-being. So how to know this one? So we have to know the consequentialism, the effect to those people. And then respect for the right of the stakeholders. So what are the stakeholders need to know? They have to know. So this one refers to the deontology, right and duties that you should give to the what is their right of the shareholders. And then the fairness among the stakeholders. So this one refers to the categorical, comes from the words of category, right? Justice as impartially, okay? All right. Okay, and then the last one is relates with the character, all right? The virtues. So this is relate with the virtues. And then the specific ethical decision making issues. So different behavior in different cultures. So we have to look also because in a different culture, so of course a person will act differently. So this is relate with the relativism, and then the conflict of interest limits self-interest behavior. All right, so when we have the problems that relate with the conflict of interest, so we have to, so this one it falls under deontology, subjectivism and egoism. All right, so next one is the preliminary test of ethically. So most executives develop their own rules of thumb for deciding whether their action is ethical or not. All right. So if they think this is ethical, then they think that they will do it, and if they think this is not ethical, they won't do it. Even though sometimes this is useful, but then the rules of thumb already represent a comprehensive examination of the decision made. So it means that here it's useful for them to use that one, but sometimes it does not represent the things that's supposed to be do. All right, so if this preliminary test give rise to concern, a more thorough analysis should be performed using the stakeholder impact analysis. Okay, so we have to see the impact on the stakeholders. Right, so these are the questions like we have to ask whether I will be comfortable in this action, and then if what happen if the decision will be appear in the front page of the paper for the tomorrow morning. Will I be proud? Whether your mother will be proud. So is this your decision according to the corporation's mission and code? Do you feel this is right? Okay, so these are the things that you have to ask. So this one is the overview, just like what I said before, the consequences, the impact, the motivation of the virtual ethics, all right, that relates with the possible problem that will be, we have to analyze on the problem itself. All right, so this one, the businessman or professional accountant faces ethical problem. So the first resource for guidance is they should be to be corporate and professional code of conduct. They should refer to this code of ethics, code of professional conduct as their guidance. As you still can remember, the MIA, they have the MIA code of ethics, they have law, they have to follow. However, the corporate and the professional codes of conduct often do not specifically apply to a particular problem faced. So it means that they just give a guidance. But if they have something problem, but they have to refer, they have to use their own judgment whether this one should be according to the professional or not, based on the guidance or not. All right, so the decision maker can be guided generally using these ethical principles. And then, so this is what we know the stakeholder impact analysis. All right, so here the corporations are now accountable to the shareholders and non-shareholders group. And then the shareholders is stakeholders is anyone who affected by or can be affected by the objective of the organization. So it means that anyone that related affected with the company. So it has become the evident for the company cannot reach its full potential, so it is losses support of one of the stakeholders. So if some sort like here, we can see so many the stakeholders that relate with the company, some sort like employees, the supplier, financiers, communities, trade union, political groups, and then trade association, competitors, and customers. So this group is actually the stakeholders, right? Stakeholders of a firm. So they will be affected. So if you cannot get the one of the two or parties, so it means that it is going to affect your company. All right, so here it states that shareholders are made up of person and institution. It doesn't matter who, but this is they're interested in a longer time. So ethical investors have and many other investors so believe in managing on a broader basis rather than short-term profit. Usually maximizing profit in a longer than 1 year frame requires harmonious relationship between the stakeholders and their interests. So it means that here to have a long-term relationship, long-term benefit, so they should focus more on stakeholders and their interests. All right, so corporation found that in the past they were legally and practically accountable to shareholders, all right? Legally and practically accountable to shareholders, but they are becoming increasingly accountable to shareholders. Previously, they only focus on the shareholders, the person who invests the money, but now we have to focus to the stakeholders. All right, so these are the fundamental interests with regard to the decision making by the company. So number one, they have to think about the interest would be better as a result from their decision. Okay. And number two, decision should be fair distribution to benefit and burden. So it means that it should be fair to everybody. All right. The third one should not offend any rights or any stakeholders. All right. So it should be cannot offend their right. Okay. And then the last one, the resulting behavior should demonstrate duties owed as virtuously as expected. All right, so here we have to consider the wellness or the effect or the consequentialism should be result more benefit, right? So it shows that they should not offend any rights of the stakeholders. Fairness, the distribution should be a benefit should be fair. And then virtual expectations or virtual ethics, the decision should reflect the shareholders' expectation of their virtue. And then all four consideration must be satisfied in order to be ethical. So this one, if you look at the certain case, you see whether these things they followed or not. So if they follow, so this one can be considered as the ethical. All right, so measurement on quantifiable impacts in terms of profit. So profit is actually the interest of the shareholders, all right, and also the essential survival of the corporations. So it means that here, if the company cannot make it profit, of course, they cannot pursue, they cannot sustain in a long run. And then, however, profit is only a short term, so several other effects that they are considered rather than profit. So item not included in the profit, but this one also we have to measure directly. So such as here is stated when the company pollutes or polluted to the air, water and so on. So the cost of clean up usually absorbed by the individuals, companies or certain other parties which is related. It doesn't matter whether it's come from the state government and so on. All right, these costs are referred to as externalities, even though they are being paid by others, it's not from the company itself. Their impact can often be measured directly, costs clean up incurred by others. Alright, so other externalities exist where the cost included determined by the company's profit. Number one, the donation and the scholarship, if they give to the other party, loss of health suffered by the people who absorb the pollution. And then, however, they should be included in the overall assessment. So they have to consider all those things will be affected. Okay, for example, here scholarship. So this one will give the benefit on increased earnings gained by the recipient. Loss of health. So this one, income loss plus with the medical treatment. So all these things that we have to consider. All right, bring the future to the present. So it means that here the impact, bring the future impact to the present. Okay. All right. So next one will be dealing with uncertain outcomes, such as here the probabilities or the possibilities of optimistic, pessimistic, and best estimate from the, uh, for example, here the possibilities of the certain aspect, right? The uncertain of the futures. So this is what we call all expected values. And then identifying stakeholders and ranking their interests. So what suppose you do? You have to see their all stakeholders and their interests. And then what you have to do next is a cost benefit. Does it really reflect the importance of the shareholders? For example, scholarship for the poor recipient could create a benefit for that person, greater impact compared to person with the well-off. So it means that here, if you give the scholarship to the poor people, it will give a greater impact rather than you give the person who already have the money. All right, so this one, assessment of non-quantifiable effects. So we have to see the fairness among the shareholders. Is it fair? Is it ethical? Is it fair to all of the stakeholders and so on? Right of the stakeholders, we have to see whether this is ethical impact, do not offend any right of the stakeholders. And then the assessment and motivation of the behavior. All right, so here in the past, decision makers have not recognized importance of the stakeholders' expectation of the virtue. So we have to assess also the motivation and behavior. So this is relate with the decision making approaches and recommend an ethical action. So number one is the 5-question approach. Number two is three standard approach or 3-question approach. And then the third one is the Pestin approach. So this is how the decision making approach that we should do. So they have three. Traditionally, we have three methods over here: the 5-question, 3-question of moral standard, and the Pestin approach. So what is the difference between the three? So number one, we move on to the 5-question approach. So this one is created by the Graham Tucker. So the 5 questions we should ask. The first is it profitable? Usually, is it the shareholders get profit? Is it legal? Is it fair? Is it right? And then the 5th one is actually demonstrating expected motivation, virtues, and character. Do they really they have the characters of the virtues of the stakeholders and so on? Right, so the 3-question approach is utilitarian, individual's right, and justice. So it means that here we have 5, we answer it 5, but this one they focus for the 3 main areas. Number 1 is utilitarian, the effect, right? The next one will be right. Is it consistent with the other people's right, and is it justice? Just distribution and benefits and burden. Is it equally distributed or not? All right, so the 3 Pestin approach. So number 1, the golden rule ethics. So it shows that the organization and individuals' rules and values. And then this is the ground rule, the end rule to determine the greatest net good for all concerned. So benefit should be to who, and the rule ethic to see where the boundaries a person or organization should take into account according to the ethical principles, whether they follow the principles of the ethics or not. And then the social contract ethics to determine how to move boundaries, remove concerns or conflict. All right. So this is related with the Pestin approach. All right, so summary that or the steps that we should take in order to see the ethical decision. Number one, we have to identify. So the fact, stakeholders group, and the interest that affected. Who are the person affected? Is it the company? Is it the person or shareholder? And then the stakeholder interest. And then we have to identify important issues in the analysis. So we have to rank them. And then we have to assess the impact. So what will be the impact if the actions is taken? Thank you.